What's up, everybody? This is Investing Sensei here to bring you episode 115 of the portfolio update. So hopefully you guys are doing awesome. I definitely am. For all my subscribers that do celebrate Christmas, I hope you had a great Christmas with you and your family, but I definitely did. But anyways, in this update, I have some awesome news I want to share with you guys. First thing I will be showing you guys is the, what I bought, what I sold, any dividends that came in, and as well, then I will be jumping over and showing you guys a new dividend company that I did add to the portfolio. It is a dividend growth beast of a company, guys, and let me know in the comment section if you do figure out which company it is, but I will show you the reasons why I did that, and I'll show you the technical analysis. I've always wanted to invest in this company, and I think it's a great opportunity for me to start that position, which was this past week. But after that, I will be showing you guys how much the portfolio grew, because you guys already know that every week we come back, we see this calculations on our projections increase, and that is a beauty of dividend growth investing. We love coming back every single week, seeing this grow no matter what the market is doing. The market could be going down, the portfolio would be down, the portfolio could be stagnant, or the portfolio could be making gains, but every single week we know we come back, we see this grow, and by the end of the video we should see this much higher. Hopefully it's at 3040 or so, but if not, the following week we will hit those types of milestones, but by the end of the video this will be much higher, and that is the motivational thing that keeps me motivated to continue to grow this portfolio, because eventually we're going to be using this projection of amount that the dividend actually, the portfolio pours in of dividends. We will be living off of this, so this is a great goal. And as you guys can see, the quarterly dividends, they continue to grow and grow over time. This little area here is kind of a correction area, because we did sell out of some positions and readjusted some. We sold out of Verizon, and so this actually took a hit, and then we're gonna recover. We're still waiting on the end of December for the dividends, and that will wrap up Q4 of 2021, which will be pretty sweet, as you guys already saw that how many dividends have continued to pour in. But if we look at the M1 portfolio, see that it's at $212,469.61. We're up about 95,000, and then our cash balance is at $4.76, which is something that we will get reinvested next week. But overall we are up. You'll see this continue to go up. But if we look at the 1 quarter, guys, you'll see that back in October we're at 185,000, and we just continue to go up, and then we started stagnating, but every week we come back, we see that projection continue to increase no matter what the portfolio is doing, right? So we went all the way down to 205, and now we're coming back up. So it doesn't matter if we go down or up, or we continue to stay in this, our dividend projections will continue to increase every single week, which is one of the awesome things that I love about dividend growth investing, as well as all the dividend increases that we've received. I can show you that right now real quick. Look at all the dividend increases we have received for doing absolutely nothing. Lockheed Martin's going to pay us on the 27th of December, and we got a dividend raise of almost 8%. Union Pacific 10%, and they will be paying out in a couple days. So how cool is that? Union Pacific has actually increased it over 20% for the year, which is amazing, guys. Look at this. American Towers, we got Avi, Realty Income, and then the last one, Pfizer. So all of this stuff, we did absolutely nothing besides hold some great companies, and we are getting rewarded for that, which is pretty awesome, guys. Overall, we're going to continue to increase this, and that is the beauty about dividend growth investing. But overall, in the value over time, you see that it continues to go up and up. You'll see that in our holdings, because we actually have a dividend growth portfolio, we are up massively. We're about $94,464, and that's about 80% that we have. And we have been getting some amazing returns. Apple, we're up 124%, and then Nvidia, we're up 700,000%. Well, I guess not 700,000, but 700%. And we put like 4,000 and it's worth 35,000. So we have gotten amazing returns overall, which is, I'm pretty happy and I can't complain with that. And then, you know, I actually took about $10,000 worth in profits from Nvidia, and you know, we still have you know, more gains to go over the long term. So we get the best of both worlds with dividend growth investing as well. We get those dividend raises. But let me show you guys the activities on what I did this week. Let me get the start date for that for us, and that was going to be on the 20th of December 2021. And there we go. So first thing we did on the 20th was did 2 buys, $103.80, and this was actually Waste Management's dividend. It got reinvested, and then $100 from Lockheed Martin. The $100 was from 2 referrals that did sign up, so you guys still have time if in case you guys are interested in signing up. M1 is running a promotion of $50, so if you sign up with the account you deposit $100, you get $50 right away, and then you know, that's 50% return on your $100, which is a pretty awesome return. But yeah, if you are interested in that, I think you have it till the end of the year, and then my referral link is in the video description, so check it out. But anyways, on the 23rd of December, we got the dividend from Nvidia, $4.76, and then on that same day we deposited $100, and then we did 1 buy. So you guys guessed it, Lockheed Martin. So we have continued to buy Lockheed Martin. I think we're over 30 shares now, which is pretty awesome. And then the last one, we actually went ahead and deposited another $100 that same day, and we did 1 more buy, which I'm actually not going to show you because I want to show you guys a couple stats of this company. This is the new company I entered to the portfolio. But let's go ahead and jump over that. Actually, you know, real quick, let's go ahead and see how much dividends we made for the week, which you guys already guessed it since we have the script. Click calculate. We made $4.76. I do have a tutorial for this if you're interested and you have M1. But yeah, $4.76. We did nothing for that. But if we actually show you, I will show you guys the next company that I added to the portfolio, guys. So this company, I'm not going to name it first, but this company has a dividend yield so far of 1.63%. Right now, the payout ratio is 27.16%. 5-year CAGR is 6.38%, and dividend growth is 53 years. That is pretty awesome, guys. And if we look at the dividend per share, you can see that January 2017 was $2.32. Now it goes to $2.44, and over the years it has continued towards the end. Right now it's at $2.94. They actually also announced almost a 30% dividend increase this year, which was pretty awesome. If we look at the payout ratio, you'll see that they were at around 49% and then 45%, and throughout the years they've actually been able to decrease this, and now it's currently at 21%, which I showed you guys earlier. But you'll see that the net income for this company on January 2017 was about $2.7 billion, and it has continued to go up and up every year, up to $4 billion for January 2021. So that is something you want to see in a company. Continue to grow this, not actually decline it or stay stagnant, because this also means that they will continue to pay out that dividend, as well continue to raise it over time. And if we look at their total assets, you will see that they have been increasing them over the years. Long-term liabilities have also slightly increased over time. And if you look at the total equity, which is actually pretty good, if you were to subtract the total liabilities minus the total assets, you would get about $13 billion. So that is pretty great. And if you guys had guessed Target, you guys were correct. So let's look at the profile for Target. So Target Corporation operates as a general merchandise retailer in the United States. The company offers food assortments including perishables, dry, grocery, dairy, and frozen items, apparel, accessories, home decor products, electronics, toys, seasonal offerings, food, and other merchandise. And beauty and household essentials. It also provides in-store amenities such as Target Cafe, Target Optical, Starbucks, and other food service offerings. The company sells its products through its stores and digital channels, including Target.com. As of January 30th, 2021, the company operated approximately 1,897 stores. Target Corporation was founded in 1902 and is headquartered in Minneapolis, Minnesota. How awesome is that, guys? You guys see employees total is about 409,000 employees. And then, this is a company I have always continued to, kind of procrastinate. I've always thought it was kind of a company that I would eventually get in. And, this time it was the time for me to get in. And the reason why, if we look at the technical analysis, I have Yahoo Finance here. You'll see Target's currently trading about $221 after hours. It's gone up a little bit, but not too big of a deal. But if we look at the, I have the Bollinger Bands, and then I have the 50-day moving average, 200-day moving average, and the 300-day moving average. So if we look around the 3 months, you'll see that the green line here is our 50-day moving average. You'll see, which I guess I should go ahead and no, I'll leave it here. I was going to remove the Bollinger Band, but you'll see this green line here. That's our 50-day moving average. So you'll see that currently this blue line is our price target for Target. That's our current target price. That sounds so funny, but yeah, so currently it's around 221, so you'll see it's way below our 50-day moving average. And then if we look, the pinkish looking line, which is this one right here, that's the 200-day moving average. So we're way below the 200-day moving average, and the 300-day moving average is right below it. So it almost would bounce off of it. It would almost be considered a support. And if we look actually a little bit further out and we look at the current price it's trading at, and we look at where it's at, you would see that it's close to almost May of 2021 where this price was at Target. So you're gonna tell me that from May to now they didn't sell anything, they didn't do anything, and now that's currently at that price. To me, that is a great entry for me to finally start this position, and I finally did it. As you'll see, the RSI was at 32. So I actually would love to sell some cash secured puts, get assigned 100 shares of Target, but M1 does not allow options. But overall, I added it to my M1 account, guys, which you'll see we did one buy and we bought 100 shares of Target. Not at 100 shares, but $100, and we almost have half of a share of Target. So I will continue to buy this as long as it stays under the 200-day moving average. If it goes below the 300-day moving average, that would be even better because it would be a better deal for us. But if we look at the consumers, you'll see that Target now, we have about 15% allocated. I think it's a beast of a company, and over the long term, we should get this awesome gains that I think we will. The other thing I want to show you while we're here is Lockheed Martin. You'll see that we finally have 30 shares, guys. We have been dollar cost averaging into this company, and now it's starting to slowly go up in price, which kind of sucks, right? Our cost basis right now is about 359. We were kind of trying to lower it down when I was in the 330s, but oh well. And the other one I want to show you that I'm considering actually selling out of is I'm considering selling out of ONL, since it's such a small position, and just go ahead and reinvest in it into realty income. What do you guys think? Are you guys going to keep your ONL shares? Let me know in the comment section. But let's go ahead and actually jump over to the Google Sheet so we can kick off these scripts and see how much we grew this dividend snowball, guys. So you'll see that I already went ahead and made a copy here for us. So we're gonna actually go over here to dividend payout, and we're going to actually go over here to portfolio tools, get latest dividends, and hopefully this should pick up the Target one. It probably won't show up here, but it'll show up in the latest dividends. and you know, it takes a couple seconds. I do have tutorials for this, completely free. All I ask is that you subscribe with that bell notification and you smash that like button to all my videos to help out the channel. But it looks like it's running, takes a few seconds, and there we go, guys. So you'll see that payout, we're going to be getting Lockheed Martin, Union Pacific, and Bank of America, and then we will wrap up the month of December, and then we'll start off strong on January with Pepsi on the 7th of January, which will be pretty awesome, guys. Now if we look over here to our settings, we're actually going to go ahead and delete this, and we'll jump over to personal capital so that we can get the latest copy of our portfolio holdings. Alright, guys, so we're here at personal capital. Under my M1 account, you'll see this green button that you click on it, copy holdings. What this does is it'll copy the content of your portfolio into the clipboard, which then we can jump back over to the settings, right click, paste special values only. Now we have the latest copy of our portfolio here. Again, I do have tutorials for all this stuff. It's pretty cool stuff. I will be showing you guys an update on this new scripts as a Christmas present to you guys for being subscribed. Hopefully I can get it out this coming week, so definitely look forward to it. But over here we'll click portfolio tools, update portfolio holdings. What this is going to do is going to wipe everything on this sheet and basically use all the stuff, well, I guess use the string that we just pasted in our settings and parse it. So update portfolio holdings. So we'll get wiped, it'll start using our new positions. We can jump over here, see how we are doing on the projections. So that is pretty awesome, guys. We actually hit $3,043.84 compared to $3,035.66 for the year. So we went up about $8. So that is pretty awesome. For the month, you'll see $253.65, week $58.54, and then the day we actually went up about 2 cents, and then for the hour we stayed at 35 cents. So every hour that goes by, our portfolio is generating us 35 cents. And then hourly work wage, we're still getting paid about $1.46 per hour if our portfolio was to work a 40-hour work week. How cool is that, guys? But you know, we continue to grow this. If we look at the holdings, actually, I'll show you that it actually picked up the target. So now we have this, and you can see our yield on cost and our dividend yield, which I will be showing you guys a new version of this script because I don't believe that the older version has this. I recently added this. This is more of a development trial. But this is actually all I have for you guys in this update. If you stuck all the way to the very end, be sure to drop a hashtag consumers, because I did add a new company in the consumer section. So you know, let me know what you guys think of this new company I added. Do you own it? Would you want to get into it? Is it too much overvalued? But I will continue to dollar cost average into it, and we will build that position over time. Remember, my time horizon is 15 to 20 years from now, so I think our yield on cost will be very, very awesome, especially with the 30% raise they did last year. So I guess this current year they did, so hopefully we can get more of those, and that'll grow that snowball even much larger. But if you stuck all the way to the very end, be sure that you're subscribed with that bell notification if you haven't done so already, and I will catch you guys in the next video. Take care, stay safe out there. Bye, guys.